The Fed didn't hold a press conference today. They held up a mirror. For 2 years, they told you the same story. Higher for longer. We'll do whatever it takes to crush inflation. The system is strong. We are in control. And then, in one move, they flipped. Not a tiny tweak, not a technical adjustment, a real pivot. Cutting rates into sticky inflation, opening new liquidity windows, just in case. Hinting that financial stability is now as important as price stability. That's central bank code for the fire is bigger than we're admitting, and we'd rather risk the currency than lose the system. At the same time, silver didn't politely respond. It bolted, blowing through resistance levels. Ignoring bad news that used to knock it down, trading like it suddenly remembered it's not just another industrial metal. Pointing at one destination the system hates, $100. This video is called "The Fed Just Flipped. They Lost Control and the Move to $100 Silver Has Begun." By the end of this, you'll understand what the Fed actually admitted with this flip beneath the polite language. How this pivot fits into a 4-stage pattern that has sent precious metals vertical 3 times before. Why silver, not just gold, sits in the blast zone of this move. And how to respond like an adult, not a gambler, while everyone else either panics or sleeps. This is not personal financial advice. This is pattern recognition. Let's start with what flipped really means. What it really means when the Fed flips. Central banks don't wake up one morning, drink some coffee, and say, you know what? Let's completely change direction for fun. They pivot when reality pins them to a wall. Think about the story we've been fed. We will keep rates high until inflation is dead. The banking system is sound. We can unwind the balance sheet for years. Then suddenly, they stop hiking. Then they hint at cuts. Then they quietly open new facilities, backstops, guarantees. Then they start talking more about market functioning and financial conditions than inflation. That's not control. That's triage. What they're really saying is, we can't fight inflation, protect the banks, fund the government, and keep markets calm all at once. Something has to give, and it won't be the banks. When the Fed flips like this, it means they're choosing debt survival over currency strength. They're choosing liquidity over discipline. They're choosing to risk the value of your money to rescue their own system. Every time in history that choice has been made long enough, one thing happened. Hard assets repriced violently higher. Gold, silver, real stuff. But silver is different. We'll get there. First, we need the pattern. The 4-stage pattern that turns Fed pivots into metal super spikes. Forget the headlines for a second. Underneath every major hard asset spike, there's the same brutal script. Stage 1, establishment. A commodity becomes money. Governments peg their currencies to it. Central banks hoard it. People use it in coins. For over a century, silver played this role. US coins were 90% silver until the mid-1960 seconds. You could swap paper for real metal at face value. Silver wasn't a trade. It was the plumbing of the monetary system. That's stage 1. Trust, stability, boredom. Stage 2, manipulation. Then, quietly, the metal gets demoted. Governments strip it out of coins. They cut formal ties between metal and money. The story becomes, relax, we have modern tools now. We don't need this old stuff. Wall Street steps in. Futures, contracts, ETFs, options, certificates. Silver accounts where you own a share of a giant pile somewhere. For every real ounce, multiple paper claims now exist. Physical is heavy, slow, inconvenient. Paper is light, fast, profitable. So they build a tower of promises. 10 contracts per ounce, 50 contracts per ounce, 100 claims for the same bar. On screens, it looks like there's infinite supply. Prices stay tame. People call silver dead money. That's stage 2. Stage 3, the squeeze. Then the world changes. Governments borrow more than they can ever pay back, honestly. Central banks flip from inflation fighters to panic firefighters. The Fed, specifically, flips from tightening to quietly reflating. Smart players notice. The money printer is coming back. Bonds are trash. Cash bleeds. What do I own that doesn't depend on someone's promise? Demand for real metal starts to outrun supply. Industrial users, solar, electronics, EVs, defense need reliable ounces, not just futures exposure. Investors who've read history stop trusting synthetic silver and want bars in hand. Some governments and sovereign buyers quietly accumulate physical, not ETFs, vault inventories that once looked infinite start looking thin. Deficits, where annual demand beats annual mine plus recycling supply, go from once in a while to normal. Premiums on physical rise. Certain products become hard to find. You get days where the spot price is higher than futures because people will pay more to have metal now than promises later. That's stage 3, the squeeze. Stage 4, the break. Eventually, something snaps. A major player can't deliver. A market locks up. A panic forces the Fed and other central banks into a full, open flood of liquidity. Paper markets respond with trading halts, liquidation only rules, cash settlement instead of physical delivery, sudden, unexplained rule changes. The people holding contracts realize they own a ticket in the line. The people holding metal realize they own the thing everyone is lining up for. That's stage 4, the break. We've seen this script before, and every time the Fed or its cousins flip from discipline to panic, they feed stages 3 and 4. Let's prove it. How past Fed pivots lit the fuse under silver. This isn't the first time a central bank lost control and pretended it was a plan. The 1,970 seconds. From gold window to silver explosion. In 1971, the US closed the gold window. Foreign governments used to be able to swap dollars for gold at a fixed rate. They started actually doing it a lot. Problem: there wasn't enough gold to honor all the claims. Solution: shut the window. That was a flip. From your dollars are as good as gold to your dollars are whatever we say they are. Inflation roared, trust cracked. Gold didn't just go up, gold repriced the lie. Silver followed. From a couple of dollars an ounce to nearly $50 at the 1,980 spike, not in a straight line, not without gut-wrenching volatility. But the direction of real money versus paper promises was unmistakable. The Fed shifted from pretending it could defend everything to admitting it couldn't defend anything without sacrificing the currency. Sound familiar? The Hunt brothers' right idea, deadly method. We already walked through their story in other videos, so here's the short version. They understood the pattern. They believed the dollar was doomed. They chose silver as their lifeboat. They bought a lot. Too much, with leverage, half physical, half futures. They weren't just long, they were exposed to the very exchanges they were betting against. When the system got scared, it didn't say good game. It changed the rules. New margins, position limits, liquidation only. They got margin called into oblivion. But here's the key. The people who had quietly bought physical at $4, $5, $6 an ounce and never touched leverage were still up massively when the dust settled. The Fed flipped. Monetary trust cracked. Silver exposed the lie. Those who held metal, not leverage, walked away alive. That's the lesson now. Because once again, the Fed just told you, in code, that they are willing to sacrifice the value of your money to preserve the illusion of control. Why this flip is especially bullish for silver, not just gold. Gold is the classic central bank hedge. It sits in vaults. It's the official, respectable form of monetary doubt. Silver is messier. It's not just money. It's also industrial blood for the modern economy. Your phone, your car's electronics, solar panels, 5G gear, medical devices, defense systems, all of them sip silver every single day. Gold can sit still and be beautiful. Silver has a day job. That makes the Fed's flip uniquely dangerous. Monetary side, as the Fed capitulates back toward easy money, people look for assets outside the system. Silver gets monetary demand from investors and some institutions. Industrial side, no amount of rate cuts will stop the demand for solar, electronics, EVs, and military tech. Those sectors need silver, whether the dollar is strong or weak. Supply side, silver is mostly a byproduct of mining for other metals. We can't just double silver production overnight because the Fed decided to pivot. Years of underinvestment don't disappear with a press conference. So you get a three-way squeeze. Monetary demand up, industrial demand steady or up, supply not responding fast enough, and on top of that, a fragile, highly leveraged paper market built on the assumption that not everyone will ask for metal at once. The Fed's flip doesn't create this setup. It reveals it. It says, we're choosing inflation risk and currency debasement over systemic collapse. We're choosing to support the debt tower, not the purchasing power. In that world, silver isn't just another commodity. It's one of the few assets that exists outside the banking system, has enormous industrial use, and historically explodes higher when trust in money and central banks crumbles. That's what the move to $100 silver has begun really means. Not it will be $100 tomorrow, but that the conditions that make $100 possible just went from theoretical to active. So what do you do when the referee admits he's biased? At this point, you have a few choices. You can ignore it. Treat this Fed flip as just another meeting and go back to scrolling. Speculate wildly, chase leveraged products, options, and memes, hoping to nail the exact top. Build a sober plan. Use this moment as a wake-up call to decide how much of your wealth you want in things the Fed can't flip with a sentence. Let's talk about option 3, without hype. 1. Separate surviving from winning. There's a huge difference between I want to get rich on a silver spike. I want to survive whatever the Fed's loss of control does to my savings. If it's the first, you'll be drawn to leveraged ETFs, futures, options, tiny mining stocks that can double or crater overnight. That's not a hedge. That's a casino. If it's the second, your thinking becomes, I want a slice of my net worth in real tangible metal that doesn't care who's Fed chair or what they tweet. That's the physical only mindset. It doesn't care about daily candles. It cares about ownership. 2, pick an allocation you can live with. Historically, cautious investors talk about something like 5–10% of net worth in precious metals as a hedge. More if you are seriously concerned about systemic breakdown and can stomach volatility. For a silver-focused thesis, that might be some gold for stability, a meaningful silver slice for torque. The exact number is yours to decide. But once you pick it, write it down. That number keeps you from going all in when price runs, keeps you from panicking out when price drops, turns the Fed's chaos into a background story, not a daily emotional crisis. 3. Choose forms the Fed can't QE away. You want forms of silver that can't be debased by policy, don't depend on a brokerage app staying solvent, are instantly recognizable to normal people. That usually means common bullion coins, Eagles, Maples, Britannias, etc. Standard bars from reputable refiners. Sizes. You can actually move 1 ounce, 10 ounces, 100 ounces. Not fancy collectibles, ultra-rare numismatics, fragile art pieces that only matter to a tiny niche. In a world where the Fed has lost control, people are going to care about ounces, not artwork. 4. Take storage as seriously as the thesis. You can't say, I don't trust the system, the Fed lost control, and then keep your entire position in an unallocated bank account where a line of text says, we owe you silver. If your whole thesis is that promises break, then your metal should live in places where a margin call is impossible. A glitch doesn't erase it. A rule change doesn't confiscate it by spreadsheet. That might be a home safe, a split between multiple locations, a reputable private vault where you understand the legal structure. There is no perfect solution. There are only trade-offs. But the test is simple. If this new Fed pivot ends in a genuine crisis, bank holidays, capital controls, system glitches, do I still know where my silver is and how to touch it? If the answer is no, you don't have ownership. You have exposure. What the move to $100 silver has begun doesn't mean. Let's set expectations like adults. This title does not mean silver will go straight up in a line. It won't have savage corrections. You should mortgage the house for bullion. What it means is the Fed just publicly confirmed what the math already knew. They can't both protect the currency and the debt bubble forever. Every time in history that choice has been made for long enough, hard assets have repriced violently. Silver, because of its monetary plus industrial dual role and chronic underpricing, is positioned to move harder and faster than most people can emotionally handle. $100 is not a prophecy. It's a scenario, one of many. You don't need it to happen to justify owning some metal. You also don't need to bet your life on it. You just need to decide. If that scenario did unfold, would I rather be the person watching the chart or the person already holding a few solid ounces in the real world? Final question. Who do you want to be when this ends? The Fed flipped. They told you in central bank language that they picked the system over the currency. They will not come on TV and say, we lost control, buy hard assets. They will say, we're data dependent. We're doing what's appropriate for conditions. We have the tools. Charts don't speak in press releases. They speak in dollar dives, metal explosions, squeezed spreads, broken correlations. Silver just answered the Fed's pivot with a move that says, I heard you, I don't believe you, and I'm repricing your story. Now you have to answer, not with a meme, not with a panic trade, with a decision. Will you treat this as just another noisy headline? Will you chase it with leverage inside the same fragile system that's cracking? Or will you quietly, rationally decide what portion of your wealth belongs in forms the Fed can't flip with a speech? Whatever you choose, let it be on purpose. If this helped you see the Fed's pivot and silver's move as part of a bigger pattern, not just another crazy candle, hit subscribe. In the next video, we'll zoom one level higher. The global debt spiral, the currency wars, hiding under policy coordination, and the way all of this funnels into a simple question. What do you own when trust and promises finally runs out? The Fed flipped. The pattern is in motion. The move has begun. The clock is ticking.